Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning, and the equity markets continue to power higher. Of course, the equity markets are off a little this morning. Nasdaq's down about 1%, S&P is off a few tenths of a percent, same with the Dow. However, the point is that the markets are acting very constructively. And what I'm referring to is we go back, look at the year, we saw huge sell-offs in January, followed by another sell-off, that was February, started by another sell-off in March, then a smaller sell-off in April. Then the market started trending higher, and the sell-offs became less and less. If you look at the Nasdaq or the S&P 500, you'll see that the sell-offs were down to the 200-day line, and then they were just down to the 50-day line. And now pretty much we're getting a little bit pullbacks here and there, but the market's pretty much trending right around its 20-day line. So we have the S&P still above its January highs, right about the 2,900 level, gyrating right around there. Nasdaq's at that 8,000 level, gyrating right around there. But again, the pullbacks are very subtle, so we're seeing a lot of strength in this market. Now the Dow still hasn't recovered from its January highs. It's about 2% off of there at the 26,000 level. So we're waiting to see if that's going to take off. But still, the Nasdaq's the leading index. Now the Dow Transportation Index doing very well at new highs, so we'll see if the Dow follows it. Typically that'd be a very good sign. The Russell 2000 also near highs, and again we're seeing that contraction of selling. So the question is, so if everything's so rosy, what can go wrong? Well, you should never be complacent. So here's the things that we're going to look out for. Now if we start seeing the Nasdaq or the S&P start to dip below its 50-day moving average, that may tell us that perhaps selling is expanding. But for right now, that's not the situation. One of the other things we look for is how are the leaders acting, the big cap liquid leaders that every mutual fund holds, stocks like Apple, Amazon, Microsoft, Google, Facebook. So, Amazon's still holding up pretty well. We'll see, it looks like it's going for its 50-day moving average this morning. We'll see if it touches there, bounces, or collapses. Apple's holding up pretty well. The 50-day moving average is a little above $200. So we'll see if that can hold that. Microsoft's acting very well. So not until we start seeing those stocks faltering, again, will we get concerned. And the other things we're looking for is a lot of the smaller growth stocks that I've talked about over the last few weeks, where we've seen some high volume closes after earnings, big gap ups, and they've been holding those levels. Stocks like Roku or Copa Software, just an example, Advanced Micro Devices, AMD. So again, if we start seeing these stocks failing, that's another sign. So in summary, the point is we want to look at the indexes. If they're holding above their 50-day moving averages, no expansion of selling. We want to look at the large liquid leaders if they're still acting okay, not falling off a cliff. And of course, some of the smaller growth stocks, if they're still holding up their big gap moves after this last earnings report. But as always, the price and volume be your guide. This is George Kachuk, with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.